They think you're a sheep, ready to follow the shepherd right off a cliff without even asking where you're going. They believe that when they drop a report with flashy charts and a logo from a top Wall Street bank, you'll just do as you're told. You'll sell your silver. You'll hand over your coins, your bars, your protection against their whole system, and you'll do it with a smile because a man in a suit said so. But you're not stupid. You're here. You're paying attention. And today, I'm going to show you the biggest act of financial hypocrisy in modern history. Welcome back to Vault AG. I'm your host, and what I'm about to share isn't speculation or a conspiracy theory. It's documented fact, buried deep in regulatory filings they hope you never read. While you were sleeping, working or worrying about grocery prices, and if you could afford another 10 ounces for your stack, JP Morgan Chase, the largest bank in the US, was doing something extraordinary. They were telling you to sell silver, and at the very same time, the same executives were making another decision. They were buying it, not just a little. They were accumulating 240 million ounces of physical silver. Let me say that again so it sinks in. 240 million ounces. That's the largest private stockpile of silver ever held by one financial institution. They're telling you the house is worthless while they're buying every single house on the block. They're telling you the ship is sinking while they load their lifeboats with treasure. Today, we're going to expose exactly how they did it, why they did it, and what it means for the future price of silver. The vault doors are open. Let's step inside. To really grasp what JP Morgan has done, you need to understand what 240 million ounces truly represents, because numbers that big can feel abstract. So let me put it in perspective for you. The entire world mines about 820 million ounces of silver each year. This means JP Morgan is sitting on nearly 29% of a full year's global mining output. Almost 1/3 of everything that comes out of the ground from every mine in Mexico, Peru, China, Australia, and the US combined is matched by what's in JP Morgan's private vaults. But hold on, it gets even more shocking. Did you know that out of all the silver mined each year, only a small fraction is actually available for investment? It's true. We mine about 820 million ounces annually, but a whopping 630 million ounces get used up in industries. We're talking solar panels, all our favorite electronics, life-saving medical equipment, electric vehicles, and even advanced military tech. And here's the kicker. Most of that silver is never recycled. It's essentially gone forever. So that leaves about 190 million ounces for investors like you and me. But what if I told you that one single entity might control almost all of it? Let's talk about JP Morgan. According to public warehouse data and regulatory filings, this banking giant has been on a massive silver buying spree since 2011. Back in 2020, analysts estimated their stash was at least 150 million ounces. By 2023, that number reportedly grew to over 200 million. And the latest whispers in the market? Some estimates suggest their holdings could now be around 240 million ounces. To put that in perspective, that's more than the entire annual supply available for investment. This is considered one of the largest private silver hoards in modern history. Now, you might be thinking, isn't this the same JP Morgan that's faced regulatory heat for its trading practices in precious metals? Yes, it is. Despite past legal troubles, reports show they just kept adding more and more silver to their vaults. This has everyone in the financial world buzzing. What is their strategy? What do they know that we don't? While JP Morgan isn't exactly shouting their reasons from the rooftops, this massive accumulation has sparked intense debate among investors. Are they anticipating a huge spike in industrial demand? Are they preparing for a major shift in the global economy? Or is it something else entirely? One thing is for sure. When one player holds this many chips, it changes the entire game for the silver market. It makes you wonder what the future holds for this precious metal. Have you ever wondered how big banks like JP Morgan seem to always win? How they tell you one thing while they do the complete opposite? Today, we're pulling back the curtain on one of the biggest, most audacious market plays in modern history. A story about silver, deception, and a multi-billion-dollar trap that's about to snap shut. JP Morgan operates on two separate levels. First, there's their public research division. These are the experts you see on financial news, the ones who publish detailed reports for regular investors and big clients. When they issue a sell rating on silver, it becomes a global headline. Bloomberg, CNBC, everyone covers it. The message spreads like wildfire. Sell your silver. But then there's the other side of JP Morgan, their proprietary trading desk. This is the bank's own money, trading for the bank's own profit. Legally, these two departments are separated by a Chinese wall. They aren't supposed to share information. The analysts writing the reports shouldn't know what the traders are buying. But here's the thing. Whether they coordinate or not, the outcome is shockingly effective. Imagine this. The research division releases a bearish report predicting a crash in the price of silver. Retail investors, trusting the experts, start to panic. They sell their silver ETFs, their futures contracts, and the price begins to drop, just as predicted. And who is waiting patiently on the other side of that trade, ready to buy up all that cheap silver? You guessed it, the proprietary trading desk of the very same bank. It's technically not illegal, but it feels deeply wrong. It's like the fox publishing a newsletter telling all the chickens the hen house is on fire, then waiting at the exit to feast as they flee in terror. Let's look at a real-world example. In March of 2020, as the pandemic brought the world to a standstill, JP Morgan announced that silver could plummet to just $12 an ounce. The headlines were everywhere. Silver's crashing, get out now. And what happened? The price did fall. It briefly touched $12 in the market chaos, but then something interesting started showing up in the COMEX warehouse reports. Massive, and I mean massive, amounts of physical silver started flowing into JP Morgan's vaults. They were buying hand over fist, scooping up the very panic they helped create. By August of that same year, silver had skyrocketed to $29 an ounce. JP Morgan, having bought millions of ounces at $12 to $14, was sitting on a 100% gain. But they didn't sell. They kept holding. They knew $29 wasn't the peak. They understood the coming storm of supply shortages and soaring industrial demand. This pattern has repeated itself over and over. Publish negative research, wait for the price to fall, accumulate the physical metal, wait for the price to rise, and then do it all again. It's an incredibly profitable strategy, and it relies on one crucial element. You, the retail investor, to be the one who gets bluffed. It requires you to believe their reports and to sell when they tell you to. But recently, the game has started to change. In the last few years, something unprecedented has happened. Regular investors, the silver stackers, the sound money advocates, they stopped listening. They saw the pattern, they understood the manipulation, and they held on. Now, JP Morgan has a serious problem. They're sitting on a hoard of 240 million ounces of silver, but they're trapped. Why can't they just sell it and take their profits? Because if they dump that much silver on the market, the price will crash, and they'll lose a fortune. But more importantly, if they sell, the physical silver leaves their control forever. It goes into the hands of industrial users and individual stackers who will never sell it back at a low price. This is the key point most people miss. JP Morgan doesn't just own silver to make a profit. They own it to control the market. As long as that metal sits in their vault, they can lease it out and use it to manipulate the paper price. The moment they sell, they lose that power. And in a market facing a genuine physical shortage, losing control is a death sentence. The industrial demand is exploding. Solar panel manufacturers need silver. Electric vehicle makers need silver. The military needs silver for every single missile, satellite, and radar system. Suddenly, JP Morgan's 240 million ounce hoard isn't a weapon anymore. It's a target. It is the last great visible stockpile of silver on the planet, and the whole world knows where it is. To really grasp the scale of this, you need to understand that silver manipulation isn't new. This has been going on for over a century. Back in 1873, the US government passed what became known as the Crime of 73, which demonetized silver. Overnight, silver went from being real money to just another commodity. Bankers holding gold got rich, while farmers and workers who relied on silver were ruined. Fast forward to 1965. President Johnson removed silver from all American coins, promising there would be no shortage. Today, those pre-1965 silver coins are worth about 25 times their face value. In 1980, the Hunt brothers famously tried to corner the silver market, accumulating around 200 million ounces. Sound familiar? But when the price hit $50 and threatened the entire paper market system, the exchange simply changed the rules, banned new buy orders, and forced them to sell. The Hunts were bankrupted. The message was clear: if you go against the banking establishment, you will be crushed. But if you are the banking establishment, you can corner the market without consequences. The manipulation continued. Through the 2008 financial crisis, the price was held down while trillions of dollars were printed. Silver should have gone to the moon, but it barely moved. In 2011, when silver hit $49 an ounce again, the exchange raised margin requirements 5 times in 8 days, crashing the price. JP Morgan was widely accused of engineering the smash, but nothing ever came of it. Even when they were caught, the consequences were minimal. In 2020, JP Morgan paid a $920 million fine for spoofing, placing huge fake orders to manipulate prices. It was the largest fine of its kind in history, but for them, it was just a few weeks of profit. The low-level traders went to jail while the executives who orchestrated the whole scheme walked away free. And that brings us to today. The same bank, the same tactics, the same massive accumulation of silver. But the world is different now. The reason JP Morgan is hoarding this silver isn't just to play games with the paper price, it's because they know what's coming. Every single year, the world uses more silver than it mines. In 2024, that deficit was over 200 million ounces. That metal had to come from somewhere, from existing stockpiles to meet demand. Where did it come from? From ETFs, from exchange vaults, and from private investors who were scared into selling. The industrial users are getting desperate. The above-ground stockpiles are draining at an alarming rate. And sitting in the middle of it all is J.P. Morgan, holding the last big stash. They thought they were controlling the market, but now they are trapped by their own hoard. They can't sell without crashing the price, and they can't hold on forever as the physical deficit grows larger every day. The game has changed, and the retail investor is no longer the sucker at the table. The so-called smart money may have finally outsmarted itself. What happens next is anyone's guess, but one thing is certain. The pressure on the physical silver market is reaching a breaking point, and JP Morgan is sitting right on the fault line. Listen up, because what I'm about to tell you is crucial. There's a problem with silver, a big one. The above-ground stockpiles, they're finite, and they are running out. The Silver Institute itself has warned that over the next decade, we could face a deficit of over 1.5 billion ounces. So where is all this new silver going to come from? It's not coming from mines. Production is flat, even declining. Most silver is just a byproduct of mining for other metals like copper and lead. The world has very few primary silver mines left, and the ones that do exist are burning through their reserves faster than they can find new ones. Meanwhile, demand is absolutely exploding. Solar panels need silver. The world is adding hundreds of gigawatts of solar capacity every single year, and each gigawatt needs about 1 million ounces of silver. By 2030, solar demand alone could eat up 300 million ounces a year. Electric vehicles need silver in their batteries, their charging systems, and all their electronics. As the world goes electric, silver demand goes through the roof. 5G networks need silver for their antennas. Millions of new cell towers mean more silver demand. AI data centers use silver in their servers. The AI revolution is accelerating, and so is its need for silver. And then there's the military. Every Tomahawk missile uses around 500 ounces of silver. An F-35 fighter jet uses even more. With global tensions on the rise, military demand for silver is a classified secret, but you can bet it's surging. The math here is simple. Demand is skyrocketing. Supply is stagnant. The stockpiles are being drained. And right in the middle of all this, you have JP Morgan, sitting on a massive hoard of 240 million ounces, telling you to sell. Think about that. They want your silver. They need your silver. Why? Because even their colossal 240 million ounce stash won't be enough. It's maybe enough to cover the supply deficit for 3 or 4 years. After that, they need more. And in a shortage, the only way to get more is to convince the people who have it to sell. That's why they put out bearish reports. That's why their analysts talk the price down. They're trying to scare you into selling so they can buy it from you on the cheap. But I need you to understand something. You are not crazy for stacking silver. You're not a conspiracy theorist. You were smart to see through the lies while the mainstream media laughed. You knew that a system built on printing infinite money couldn't last forever against a finite real-world monetary metal. You understood the paper price was just a fiction, a game played by banks who never planned on delivering the physical metal they sold on paper. And now, your vindication is coming. For years, they called silver a pet rock. They said it was for doomers. They laughed at the silver squeeze. They mocked the apes on Wall Street silver and said they would lose. But who's losing now? JP Morgan didn't stockpile 240 million ounces because they think silver is going to $15. They did it because they know it's going to 100. They know it might even go to 200. They know that in a currency crisis, an industrial shortage, or a geopolitical conflict, silver becomes one of the most critical assets on the planet. They aren't stupid. Their actions tell you everything you need to know. Follow the money, ignore what they say, and watch what they do. They tell you to sell, but they buy. They say silver is overvalued, but they accumulate more. They say the squeeze is over, but they continue to hoard. The gap between their words and their actions is the biggest tell in financial history. It's like a poker player saying "I fold," while shoving all their chips into the middle of the table. And this is where their plan went wrong. JP Morgan made a fatal mistake. They assumed the small retail investors would always be the easy marks. They thought the apes would get bored, get distracted, and move on to the next meme stock. They figured if they just suppressed the price long enough, the stackers would give up and sell. But the stackers didn't sell. We bought the dip, we bought the crash, we kept buying at $18, $22, $26. We turned our paper dollars into real physical metal and took it out of their system. Now, JP Morgan is facing a nightmare. They have their 240 million ounces, but the market is starting to demand even more. Industrial users are getting nervous. The lines for delivery are getting longer. The premiums you pay for physical coins and bars are exploding. They can't just dump their hoard to push the price down anymore. Because if they sell into this shortage, that metal will vanish into the industrial supply chain and it will never come back. They built a trap, and now they're caught in it. Let's look at the numbers, because the numbers don't lie. The comex registered silver, that's the silver actually available for delivery, has been draining away for years. The latest report shows only about 30 million ounces left in that category. That is not a lot. In a single month, if enough futures contract holders decide to take delivery of the physical metal, that entire stockpile could be wiped out. JP Morgan's 240 million ounces are mostly in the eligible category. That means it's in the vault, but it's not for sale. It belongs to them. So the entire market is fighting over just 30 million ounces while industrial demand just keeps growing. Now imagine what happens when the price really starts to move. At $50 silver, mining stocks will explode, retail investors will get FOMO and rush in. ETF inflows will surge. Suddenly, everyone will want silver, but there will be no silver left to give them. At $75 silver, real panic will set in. Industrial users will start stockpiling, ordering 6 months of inventory instead of 1 because they're terrified of running out. This will accelerate the shortage even faster. At $100 silver, the COMEX exchange faces a choice. Deliver metal they don't have or default on their contracts and settle in cash. If they settle in cash, the physical price completely detaches from the paper price. You could see the paper price at $100, while the price for real physical silver in your hand soars to $200 or more. This is the endgame. This is what JP Morgan has been preparing for. They aren't hoarding silver to make a small profit. They're hoarding it to survive the collapse of the paper market. They know when that happens, the only thing that will matter is physical metal. And they have 240 million ounces ready. You should have yours too. But here's what they didn't count on. They didn't count on you having physical metal in your vault too. They didn't count on millions of retail investors around the world holding coins and bars that will never ever be sold back into the system. The silver squeeze isn't about beating JP Morgan. It's about surviving what comes next. It's about having real money when the fake money dies. And we absolutely cannot ignore the geopolitical dimension. China has been accumulating gold and silver for over a decade. The Shanghai Gold Exchange trades physical metal, not paper promises. The Chinese government actively encourages its citizens to buy precious metals as a store of wealth. Russia has been dumping U.S. treasuries and buying gold ever since the sanctions began. They are preparing for a world where the dollar is no longer the reserve currency. The BRICS nations are actively discussing a commodity-backed currency. They want to break free from the dollar system. And what backs a currency better than gold and silver? These are the monetary metals that have served that purpose for 5,000 years. JP Morgan knows all of this. They have analysts in Beijing and Moscow. They read the same reports we do. They see the de-dollarization trend. They see the global move toward hard assets. And that is precisely why they are hoarding silver. Not because they think the current system will continue, but because they know it will end. They are hedging against the very system they helped create. When the dollar fails, when the paper markets collapse, JP Morgan wants to be holding real assets, not paper claims. They want to be the bank that survives the Great Reset. And they are willing to lie to you, manipulate you, and steal from you to achieve that goal. But here is the beautiful irony in all of this. By hoarding silver, they have validated everything the stackers have been saying for years. They have proven that physical metal matters. They have proven that the paper price is a fraud. They have proven that the end game is a return to sound money. They are the ultimate confirmation of our entire thesis. The enemy is stacking. So, where do we go from here? What's the roadmap for the next 12 months? First, understand that volatility is going to be extreme. JP Morgan and the other bullion banks are not going to go quietly. They will fight. They will use their remaining ammunition to smash the price, to trigger stop losses, to create widespread panic. Every time silver drops $3 in a single day, the financial media will declare the bull market over. They will tell you to sell. Do not listen. The fundamentals have not changed. The deficit is still growing. Industrial demand is still surging. The above-ground stocks are still depleting. A paper price smash does not create a single new ounce of silver. It just transfers metal from weak hands into strong hands. If you see the price crash, if you see the headlines screaming that silver is finished, just smile, add to your position. Thank JP Morgan for the discount, because every ounce you buy at $28 is an ounce they cannot buy at $28. Second, watch the premiums. The spot price is a fiction. The real price is what you actually pay to acquire the metal. If premiums are at 20, 30, or even 50% over spot, that is the market telling you the truth. That is the market saying the real supply-demand balance is far tighter than the paper market suggests. When premiums explode, it means the delivery mechanism is breaking. It means the connection between paper and physical is severing. It means the end game is near. Third, watch the COMEX registered inventory. Every single week, the CME publishes vault reports. If you see the registered category draining toward 20 million ounces, then 15 million, then 10 million, the clock is ticking. At some point, there simply won't be enough metal to satisfy delivery demands, and the exchange will face a crisis. Fourth, understand that you are not trading for fiat profits. You are not trying to sell your silver for more dollars. You are trying to preserve your wealth through a currency transition. When silver hits $100, don't sell it for dollars that are losing value every single day. Use it as collateral. Borrow against it. Trade it for other real assets like land, businesses, or income-producing property. The goal is not to die with the most dollars. The goal is to emerge on the other side of this crisis with your real wealth intact. Fifth, and this is the most important, do not lose faith. The manipulation has gone on for decades. It can feel like it will never end. But every manipulation in history has eventually failed. The London gold pool collapsed. The Hunt brothers' suppression collapsed. Soviet price controls collapsed. Markets always win in the end. Reality always asserts itself. And the reality is that silver is the most undervalued asset on the planet, being accumulated by the most powerful bank on the planet, while they tell you to sell. The story writes itself. Let me leave you with this final thought. JP Morgan has 240 million ounces. You might have 100 ounces, or 500 ounces, or maybe even 10,000 ounces if you've been stacking for years. In absolute terms, they have more than you, but in relative terms, you have something they can never have. You have metal outside the system. You have metal that no rehypothecation can ever touch. You have metal that no counterparty can default on. Your silver is yours. It sits in your safe, under your control, answering to no one. JP Morgan's silver is encumbered. It's pledged and leased and leveraged a dozen times over. It is the foundation of a paper pyramid that is starting to wobble. When the earthquake comes, their pyramid collapses. Your coins remain. That is the difference between holding real money and playing paper games. So the next time you see a headline that says, JP Morgan recommends selling silver, I want you to laugh. I want you to remember this video. I want you to remember that the same bank telling you to sell has accumulated more silver than any private institution in history. They are not bearish on silver. They are bearish on you. They think you are stupid enough to hand over your wealth on their command. Prove them wrong. Hold the line, stack on. And remember, in a world of unlimited paper, the one who holds the metal makes the rules. This is Vault AG. Thank you for watching. If this report opened your eyes, hit that like button, subscribe, and share it with someone who needs to hear the truth. The banks are hoarding. The manipulation is ending. And the greatest wealth transfer in history is just beginning. I'll see you in the next one. Stay stacked.